Welcome back. We start off this segment in South Africa, where the mobile operator Vodacom Group says it followed due process in bidding for a contract to provide mobile services to the government. The Competition Commission said on Wednesday it had started investigating Vodacom, the unit of Britain's Vodafone, for abuse of market dominance after the firm secured an exclusive contract to provide mobile services to the government. Vodacom shares slumped the most in more than 7 years. The antitrust regulator started a probe into a contract with the National Treasury that may constitute an abuse of market dominance. Vodacom Group slumped the most in 7 years, and the September 2016 deal to provide mobile phone services to the Finance Ministry prevents other operators from selling to state departments. In the meantime, South African Airways has agreed to hire a restructuring expert to help turn around the state-owned airline and meet conditions laid down by lenders to roll over debt. Incoming Chief Executive Officer Voyane Jarana met with British industry veteran Peter Davies last month, and he agreed to help try to return SAA to profit. Davies is the former CEO of European Airlines, including Air Malta and Brussels Airlines, and currently runs London-based consultancy Airline Management Group Limited. The appointment of a strong management team is one of the several conditions lenders have laid down to extend talks on loan repayment beyond Finance Minister Malusi Gigaba's midterm budget update in October. And South Sudan is in talks with Sudan to restart river transport and boost trade between the two former foes, potentially easing the war-torn country's economic crisis. The government says the country is keen to revitalize a trade agreement the nations made in 2012, the year before its civil war began. According to the Secretary General of the Chamber of Commerce, Simon Akwe-Dung, said the river transport could bring in exports that would end high prices in South Sudan, where inflation was 155% in July. Landlocked South Sudan's almost 4-year conflict has curbed oil production, sent prices rocketing, and according to the International Monetary Fund, could cause the economy to shrink 3.5% this year. And the board of directors of the African Development Bank has delayed a vote of a $296 million financing package for Ivory Coast National Airline, Air Côte d'Ivoire's purchase of 5 new Airbus A320s. The board discussed the proposed deal on Wednesday, but bank officials said no vote was held and the project would continue to be studied. Some board members had questioned whether the loans fulfilled the AfDB's development and poverty reduction mission. The deal structure, which would allow the Ivorian state to pass on a sovereign loan to the company, had also raised concerns. And in Kenya, borrowers are struggling to hang on to their assets as auctions heat up. A severe drought earlier this year, a slowdown in bank lending, and a prolonged period of political uncertainty are creating a growing pool of distressed borrowers whose assets are being seized by newly aggressive lenders in the East African powerhouse.
At a yard in Nairobi, cars remain parked on a dusty lot, waiting to be sold at an auction, but there have not been enough buyers lately, an increasing problem as Kenya's economy slows and repossessions pick up. George Muiruri, managing director of Leakey's Auctioneers, says they are holding 10 auctions a month, up from about 4 a year ago.
We have seen an upsurge of attachments, and this is mainly because of the economic factors, and the economy of this country is a bit slow, and therefore people are not able to meet their financial obligations.
There is a glut of repossessed vehicles, land, homes and office equipment being sold off cheaply across Kenya. Bank credit, formerly easily available, has dried up after the government capped commercial lending rates last year, leaving the lenders unable to refinance seized assets. Non-performing loans in the banking industry rose to 10.7% in August from 9.9% in June, and that's according to the central bank, and jumping into double digits for the first time since 2007. Kenya's free market credentials, staunch alliances with Western nations, and relative stability in a region roiled by conflict has made it the richest economy in East Africa and a favored regional headquarters for global firms like Google, IBM, and General Electric. but growth slowed to 5% in the second quarter of this year, below the officials' forecast of 5.5% as a prolonged election season took its toll. Analysts say people stopped investing in real estate or businesses, waiting to see the outcome of the elections.
It basically speaks more to the difficult economic circumstances. Because you're talking about auctioneers, meaning those assets of the banking industry that are being sold. There are some assets that are not being sold, that are being recognized as having a poor health, and that can be seen from the level of the non-performing loans, which have also increased. So when you see an increase in the level of non-performing loans, and the auctioneer is saying that they're doing booming business, then that basically tells you that the economic circumstances are difficult. And that also tells that the growth numbers that we've been seeing in the recent past needs to be interpreted in perspective, because it simply tells you that the growth we are seeing is not because of the vibrancy of the private sector. Instead, it is public sector expenditure-driven growth. And there's a limit beyond which you can push an economy on the back of public expenditure if growth from the private sector is muted.
Many businesses want the elections over before investing further, mindful of the weeks of post-election violence that followed the disputed 2007 presidential poll that left around 1,200 people dead and plunged the economy into a nosedive.
All right, let's wrap up this program in China, where small and medium-sized enterprises have benefited from the nationwide upgrading of consumption, and most of them expressed optimism about future growth. China-focused venture capital funds are increasing their bets on local technology companies. Let's watch this.
By late September, fund managers have raised 95.8 billion yuan this year in renminbi-dominated funds, which puts 2017 on track to be the biggest year for venture fundraising since 2012. Jing Guolei, co-founder of Shanghai Yiguo e-commerce, said the reason why China's smaller companies have become so attractive is the fact that the upgrading of consumption greatly boosted the domestic demand.
Fundamentally, it is about the changes in consumption, and you can understand it as an upgrading of consumption. Besides, the internet is serving as a catalyst to increase demand in China.
Experts say that China's ongoing economic reforms have given smaller companies a competitive edge over big ones, citing their abilities to quickly adopt new technology. That also helps them to attract more talent. In fact, about 80% of graduates in China are now being employed by smaller and younger firms.
As concepts like Belt and Road Initiative, encouragement of entrepreneurship and innovation continue to pop up, we are facing a slew of reforms. For example, those in business modes, economy and technology. They create a lot of opportunities. More and more young people are willing to take ride on those opportunities and develop themselves.
According to a recent report by accounting firm EY, 2/3 of Chinese companies with revenues ranging between $1 million and $3 billion are expecting to grow at an annual rate of more than 6%, well above the 2.7% global GDP growth forecast by the World Bank. The report also found that the primary growth strategy for the country's medium-sized enterprises is to enter into new geographic markets, both domestically and internationally.
And with that, we draw the curtain on today's edition of the program. Thank you very much for watching. I'm Chimeze Obi. Welcome.